It's been an interesting couple of weeks with wild rides going on in stocks, commodities, a lot of places. And I wanted to look at a couple of charts and look at some similarities and hopefully understand some of the indicators that show you what a top looks like. So, uh, with that, let's get into the silver chart. And if you look at the silver chart, this is a daily chart, and here you can see um, there's an astronomical increase in the price of silver in a very short period of time. This is highly unusual for a commodity. So uh, when you see action like this, it's best to stay and watch what's happening. Too many people get caught up in this action and try to ride this, and by the time they look at it, it's probably somewhere here, and then the next thing they know, they're down big and bounces again. They get in, the next thing they know, it's down again, and then uh, it's it's all the way down from there. So the best thing that one can do in situations like this is to analyze and wait and see what happens. If you got in, for example, here, which actually I managed to do somewhere around this range, then you're in a completely different place. However, if you happen to watch this action over here and it was all over the news saying, hey, silver dropped by $6, and then you go look at it, and then you think it's a good bargain, and then you get in. The prices have already increased, probably significantly by the time you look at it. And although it seems like you should be able to get in at the low here, it often doesn't happen because moves like this are very violent. So, um, if you look at this move, for example, this probably all happened within a matter of 1 hour or less, and the rest of it was this move for the entire day. So, this is why you will usually not be able to time these kind of things precisely, and it's a game that you probably don't want to play to begin with. So when everyone's excited, things are moving at 100% a day, and everything's looking great. And the best thing that you can do is to just watch what happens. And in this case, once silver dropped, you can see this action here where it's kind of like um, it's seesawing and is in this consolidation pattern for a long time. And all of a sudden, once you um, get to the end of this consolidation, it just drops. So how would you play this? Let's look at some examples and hopefully we can learn. So if the way to play this would be, based on this action, you have this big drop and you have this, uh, well, let me get my marker here. So you have this head and shoulders. And again, there are so many patterns at play here, right? So one has to get pretty creative about how they look at it, and it takes a lot of experience to analyze these stocks or patterns. So one of the patterns is this symmetrical triangle, and another pattern that you see is the head and shoulders. So within the context of this symmetrical triangle, which is a neutral pattern, it can go up or it can go down. You have a head and shoulders, which is a bearish pattern, and so that means that in the context of that means that your overall pattern is probably going to be this way uh, as opposed to this. So one has to look at the big picture, look at what's going on inside sometimes to understand where it might head. although this is a continuation pattern, and given the previous history, it's been rocketing, you would expect this to continue. But within the context of that symmetrical triangle, you have a head and shoulders, and that is essentially what is telling you that the market telling you that it is going to head lower. So where would you put an entry point? I would put an entry point here and get in on a trade at the uh, neckline. So this is a way to play uh, a top, just an example. Now let's get into uh, a more recent action. So once this, let's follow this through. So once it dropped and then it bounced, and eventually uh, you can see that there is this double bottom. Oops, sorry, there is a double bottom that formed. And when you look at it in the weekly, you will see that this is not just double bottom but a key reversal as well. So what this is telling you is that this is your base, this is your support for the market. And given that you have a base here, here, and here, the market has tried to go there thrice and it has failed. So it is very likely that it's going to go higher. So now what's going on? So now let's see what's happening in the near term. So if you look at a more recent action, so we have uh, another double bottom. So if you notice, uh, so this was the previous neckline. We crossed that neckline and started heading upward, but then there was this big drop, right? So this is a pretty huge drop. And then we saw another double bottom turn into a, didn't complete the head and shoulders, but it bottomed out here, and then there's another big reversal. So there is a support above this previous support line, which is great, and normally that is extremely bullish. So you have support in multiple, you have a support at the base, then you have support at the next level, and hopefully if it's really bullish, you will see a support around here, which is the third leg. So that's how markets tend to move. If you look at the more recent action, one of these patterns here is essentially a key reversal followed by an inside bar. And that is often a telltale sign that you probably want to go short. So if you look at this recent key reversal, which is this, and followed by the inside bar, you would probably do good by putting an entry point here and getting in short. Again, so the market is still working as we speak, and your stop loss would be at top of this inside bar, and your potential profit would be 29 minus say 26, so 23, something thereabouts, right? So it is possible that we might retrace all the way back here, and uh, and then we'll have to see what happens from there. So that's the way to read these charts. And now if you look at this wild ride that happened after the GameStop rally or the plunge, whichever that case was. So um, you can see that there is this gap in the futures market, and you can go back years and years and years. Markets hate gaps, and they always get filled in, and they get filled in very soon. So I knew that this we were going to hit this level at some point, and um, now let's look at a more smaller time frame to understand what entry point you might have chosen. Right. So, well, if not for the daily, the next thing that I would look at is a 4 hour chart. And in the 4 hour chart, you can see this big gap. So I actually put in a short position here. Well, I did manage to ride the longs. It's tricky. It was pure speculation. But on the short side, things were a lot easier. It was much more clear what was going to happen. And we all know how it turned out. So I put in a stop here, and then the market just plunged. And it doesn't seem to be showing any signs of recovery yet. And you can see that it is now forming another head and shoulders, which means you could see a retracement of as much as this. This means that it will happen, uh, but that tells you some of the dangers of trying to get long in this market thinking that it's very cheap. One of the reasons, other than the fact that for the reversal, other than the fact that it's gone too far, I think there are some major um, supports around 30 area, resistances around 30 area, and you can see that here. So I was honestly surprised I even cut through this, but you can see how it came back and closed below that, and then the market just plunged. Right, so um, one has to be extremely watchful, and this I think was for me was the giveaway on where I should put my short position. Let's look at gold, and then we'll get into GameStop. And I know that a lot of you are eager to hear about that. So if you look at gold, it's been in a long-term downtrend for many months now. And along the way, there's been some very interesting things. So it's a descending triangle. There are four tops. Each top is lower than the other. And then we saw this plunge. And then there was a bunch of consolidation. We saw this key reversal look like a double bottom. But then this happened and just wiped off that pattern. So it's a busted pattern. It's called a busted pattern when it doesn't turn out the way you want based on what you're looking. So we saw this key reversal. Followed by that, there's a bunch of sideways action. Again, head and shoulders formation, this being the head, this being the shoulders. And the market tanked. Saw another key reversal, which went somewhat far, and then came all the way back. Right, so this again another reversal and came all the way back, and now it's starting for me starting to look like another head and shoulders, which means it's probably going much lower. So I got in on the short side here after I saw this key reversal and the inside bar, and then I'm expecting it to go about this much, this distance here, which would bring it somewhere in the 1725 range. I am out of this right now. I don't want to be the person caught up in trying to skim the last few points in this gold market. Uh, So that's what I believe is going to happen to gold. And let's uh, take a look at the uh, crude oil chart. Very much. The reason I bring this up is that it looks very much, the tops look very much the same in nearly all the cases. So when you look at, for example, what happened in, let's find that, yes, yes, okay, apologize, just trying to find the right place here. Uh, okay, we can look at this, a monthly chart. So when you look at this monthly chart, I think I've gone over this, I'll iterate through that again. You can see this formation here, which is sort of, uh, you had this top, and in the context of this top, it's a series of bounces, and, this feels like an ascending triangle, or one could draw the line all the way from here, and it would be a consolidation pattern, a long-term consolidation pattern, right? So just to make it clearer, like this, right? So either way, it's telling you that there's going to be a big move once this consolidation is over. And given the previous price action, uh, the direction was downward, and this consolidation pattern inherently reflects that your direction is going to be downward. And how would you play this? Again, you'd watch the head and shoulders, the double top here, and this would be your entry point to go short. And now let's get to GameStop. What I was seeing in GameStop was exactly the same pattern that I saw in many of these charts, except it was on a 5 minute or a 15-minute uh, chart. Now, the reason I never look at a 15-minute chart or a 5 minute chart or a 1 minute chart, it's honestly a waste of time. But what you should know is um, when you should look at what time frames. If you look at this chart, this was an astronomical move in a very short period of time. This kind of a price action would have taken months or even years. So, if you want to understand what's happening in this price action, you have to drill down, because now everything has been, uh, just all of those years have been scaled down into a single day or two. Right, so if you want to know what's happening in that single day or two, you got to look at um, smaller time frames. And if you look at what happened here, you will see this craziness. Unfortunately, I will try to draw this. Okay, these don't have 24-hour charts, but if you look at the 24-hour chart of GameStop, you will see this. Actually, the bar extends all the way here, comes all the way here, and so it actually forms this similar type of consolidation pattern. And when I saw this, I knew we were done, and I put an a short entry point here. The market went up. In fact, I think I got kicked in here, and then it went up, but that didn't bother me at all. I knew that we were headed downward. The other giveaway in this case was This thing was out in the news by the time it got here. And whenever you see something on the news in the headlines, I can assure you that it's not going any further. It means that the run in this stock is done and it's going to head down. And if you look at the fundamentals perspective, which I usually don't do, but from a fundamental standpoint, there is absolutely no way that this stock is going to stay at 500. So the logical thing to do would have been to go short at any of these prices, and assuming that you didn't, um, short the entirety of the account balance, and you took a minimal amount of risk, you could have withstood any amount of price increase here. And when I was short this, I was prepared for this to go all the way up to 1,000, and it went from 300 to 500, and I knew it was coming back, and I didn't give in. So after this, then we saw this key reversal, and things went all the way down from here. At one point, the price came back to 300, and normally it would scare a lot of people, but it was evident where this price was headed, and so I waited it out. I wanted to get out at 50, um, but um, I lost a bit of patience and I decided to get out today at, I think, 59 or 58. Yeah, probably around here. So this is going to continue heading lower, but much of the money has been made. So um, again, looking at this, it's easier said than done, and it is certainly very difficult to call a top regardless. There are some patterns that you can look for, and I showed you some of those. Nothing is for sure in markets, so there's only probabilities, and probabilities told me that this was heading lower. So that's what I ended up with doing with GameStop. Um, so I think that's all for today. And thanks for listening, and I'll see you guys next time.